Happy Green Shirt Wednesday. Yes, the shirt has been glued to my upper torso. I'm not taking it off until the S&P makes a brand new high. Joking with you, of course. Now, just real quick, we'd like to welcome all of you here today. Today's date, October 15th. I don't know about you, but it's been soggy and wet, and it's getting a little colder. That's why we stay inside. That's what's nice about the stock market. We're not digging holes in the ground outside or mowing the grass as much. Now, we'd like to welcome Len, and Scott, Willie, BJ, Jay Richardson, and many others. Welcome to all. We got a lot of questions that are in the chat, so we want to get those to those as soon as possible. So just real quick, I'll show my X content in just a moment. Some of you might be wondering, I know you have a handle on X, like what's on it? I'll talk about that in just a moment. Now you can find me at, my handle is at James Boyd CS. Do post educational content there daily, and I'll show that in just a moment on the other side of the disclosures. Now, just real quick as we get going, remember the information is provided for general informational purposes only. Schwab does not recommend the use of technical analysis as a sole means of research. I like to kind of use the fundamentals and technicals combined, okay? It is also kind of interesting if you kind of add intermarket analysis or macro analysis and kind of use it all together. It's kind of interesting when you start to see the bigger picture of what's really going on. It really is exciting. Now, also remember that we'll do our paper trades in the Paper Money software application. And also remember that we're trying to really use that for educational purposes only. Also remember that investing in stocks involves risk. Past performance, no guarantee of future results. And also when we show examples, they are just that. Now, I'm sitting back in my chair a little bit because I have a pinched nerve in my neck. It's extremely painful, okay? I can do anything for 45 minutes. So, the biggest thing as I want to talk about is there's been some questions on market posture. And so when we talk about market posture, I'm going to show the trend chart, okay, in just a second. Now, when we talk about kind of where is the market focusing on growth, value, or income, think about our Friday class, how there's three tickers that we actually look at. One ticker actually is focusing on growth, the other ticker is focusing on value, and the other ticker is focusing on income. You could pull up those three ticker symbols and say which of those three are stronger. Now, it's leading to me to maybe believe that growth is still up there, higher than value and income, but let me know. So we'll take a look at actually kind of where the markets are. We'll see if it's actually still a growth focus. And then we'll also talk about, for example, some new trades as well. Now, just real quick, when we pull this up, I'm going to pull up the Dow Jones if you don't mind. I want to go back to the question. Now, this is from NVOBJ, okay? It says, JB, I don't think I'm understanding trend fully. Was Friday to Tuesday sell-off just making a higher low? Okay, so let's kind of go back to something just real quick that we've been talking about. So this chart, we're looking at the Dow Jones, okay? And if you look at, let's say, the Dow Jones, we're just looking at this on a daily time frame. And these candles right here are the trend candles, okay? Now, remember, when you have light green color candles, we talk about trend 2. That's the price in between the moving averages. We get price above both moving averages, not resistance green. Price at purple candles, price falling down below the 10-day moving average, the opposite of 2. Orange colored candles, price above both moving averages, but up near resistance. And you're going to see the nasty candles, boo, are the red ones. The red ones are probably what you expect, the price below both moving averages. Now, what we said before is if we get a pullback, which sadly sometimes that happens, you like to kind of see something where they're just orange only, okay? Orange only. What does that really mean? The shallowest pullback you can really get. It's not even really a pullback. It's kind of more of a consolidation. If you get orange to purple, it's still shallow, but it's not as shallowest compared to just orange only. And then if you get, let's say, orange, purple, red, the pullback, as you can see, is just more, it's just a deeper pullback. Okay, now BJ's question was Friday, Tuesday sell-off just the making of a higher low? Now remember, you can get higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, and run back up, and you can break down in the short term. True. And that's what you really saw. The higher low that we actually had, it broke down. So that's why I said the language such as in the short term we broke down. Did the intermediate trend change? No. Did the longer term trend change? No. But my friend told me that this is .com 1999. Well, you know, look, everyone can have your own opinion, but you're also entitled to be wrong too. So am I. The biggest actually thing is the intermediate longer term trend did not change. The shorter term trend changed, okay? It broke down. But when we take a look at things from like this is why I pulled this chart up on Monday and Tuesday. When you go back and look at this, is this unusual sometimes to get a retracement back to the 30-period moving average? 30-period moving average? 30-period moving average? Is that unusual if we're in an intermediate longer term trend to the upside? No. Okay, just say no. Now, the biggest actually thing is when you take a look at this, the reason why we pulled up the weekly chart. Now, by the way, how deep was the pullback? Did it go red? It did go red for a day. Now, remember the language we always talked about, okay? If the percentage drop, if the duration of the pullback is shallow, or I should say short, and if the percentage of the pullback is shallow, kind of really, the market's stronger than you think it is, okay? So we went red for one day. Then we actually saw an inside day on the 13th. We actually tried to push back up on the 14th, and then all of a sudden the price getting above the 15th. Now remember, if this pullback, the shorter the duration is of the pullback before the prices get back above the moving averages, the stronger the trend. Yeah, but I thought doesn't matter. Yeah, but I think doesn't matter. Yeah, but I heard doesn't matter. It's the market. It's not what any individual thinks. It's not what I think. It's what the market is showing. Okay, now that's kind of hard for people to accept sometimes because I have a PhD. I have a master's. I'm blah, blah, blah. The market doesn't care, okay? Now, if you take a look at this, the weekly chart, if we pull this up on the weekly, I think what's important to kind of notice is if we pull up the weekly chart, this is what it's really showing. Now, if you look at the weekly chart, just real quick before we look at some new examples, when we saw the reversal, the diagonal reversal, okay, diagonal word of the day, we never even got any orange colored candles. They were just those Christmas tree greens for a while there. When we had pullbacks, they were just orange. And the investors like, yes, I love it when there's only orange colored candles because that's not really pullback. That's just more like consolidation. It's probably like a sideways flag, not drooping down, but kind of more what we call stiff flag. And then this one so far, could this be now, first off, the question might be, well, how can I see the pull? The pull is the green candles. There's your pull. How do I know where the flag is? How do I actually know, how can I see that? Well, if you're getting green to orange color candles only, there's your sideways flag. If I actually get, let's say, an orange purple color candle, could that be the flag right there? Yes. The non-green candles are the flag. Okay, the green candles are the pull. Now, I think probably the chart of the day, okay, I want to kind of show this just real quick, pull this up. So let me just real quick pull this up. So what I normally do is, so I've been on X here for probably about 5 years or so, done about 22,000 posts, okay, post occasionally, okay, so about 4,000. What is that, 4,000-ish a year? Break that down to 365 days. It's probably about 8 posts a day. And what I do is when I'm watching the markets, I post about them. They're educational examples, they're not recommendations. But one thing I want to kind of pull up just real quick, probably the chart of the day is really going to come back to probably the Russell. Now, I pulled this up just real quick yesterday on the Russell. When you looked at the Russell yesterday, long tail, you could measure a first down, okay, roll tide, with actually that tail yesterday. Now, that's not the non-cash. The rut, okay, you're going to see in this case broke to a brand new high. Now, I would be very interested to hear everyone's thoughts on this. If everyone and their mother is so worried about the stock market, can anyone explain to me why the small caps broke to the upside? Can anyone explain that to me? If everything is so bad, and this is the same thing that happens all the time, it's the same thing. It's just a different date. Might be a different topic, but it's the same thing, okay? If we look at what happened, here's the day on the 10th, okay? And now what you're gonna see is the market fell down, yes. And then it took 2 days for the rut to actually get back above that high, okay? People, disbelief, that's what happens, okay? And then gaps to the upside, we don't believe it. Well, if it drops, some people that are maybe trying to get in are using that shorter term bad news as the opportunity to what? Get in, okay? Now, interesting. I think what's also kind of worth noting here is when you take a look at, let's say, the some of these others. So gold, if this is kind of what's interesting, we've had some dysfunction in the markets, if you want to call it that. Gold hit over 4,200. We'll come to that in just a sec. Silver is still at 51. Crude is still at 58. So it's kind of interesting when you look at kind of the backdrop. There's been some movements, obviously, in the precious metals, which we said is the staples, the modern day staple area. But the biggest actually thing is some of these charts, when you look at the S&P, notice the S&P is not up it's not up to where it was on Friday at the open, but it's not that far off. You look at the NASDAQ itself, same thing. Looks very much like the S&P, but trying to climb itself back. And the Dow Jones itself, probably close, well, actually, heck, higher than the open on Friday. So which two indexes are actually the strongest? We're also on the Dow Jones, okay? Now, the one point I want to make, and we made this yesterday, and a lot of you kind of reached out to me and said, hey, that was a great discussion. Now, remember, investing is usually the opposite of your emotion. When you're at the peak state of just being emotional, a lot of people realize maybe I'm going to do the opposite. Okay? Now, there's a lot of parallels to that, a lot of analogies. When we kind of get to these peak state of fears, there's logical reasons why you would actually say sell everything or sell. I'm so emotional, okay? But if you go back and traded that wouldn't have worked very well. If you're selling when the VIX is peaking, things have already dropped. If you were going to sell, maybe there was a sell signal before. If you're selling when the VIX is spiking, there's a greater chance of mean reversion. There's a greater probability chance that things snap back up from lows and maybe try to come back up. Not everything, no, but probably the majority, okay? Now, have we come back down to 17 on the VIX? Not yet, okay? But you're going to see that we're kind of coming back down a little bit, and that kind of helps in terms of direction. It also helps in terms of the V word as well. Now, what I want to do is, so BJ, hopefully that was helpful. Instead of talking about the markets just for a couple minutes, I thought let's wrap a question into this, okay? Now, one thing I want to do just real quick is I want to go back to, let's say, the NEM. The paper money account actually has a position on NEM. Now, we know obviously, and I want you to imagine this, okay? Let's say you own a gold company. You have the trucks, you have the workers, and your costs are pretty much staying the same. I mean, you're paying for the workers, you got the trucks, diesel prices pretty much staying where it is, etc. And the gold price just keeps going up. Now, think about your income statement. You're selling the same 1,000 ounces every month, but the 1,000 ounces are not at 4,000. The 1,000 ounces are now at 4,200. So your margins are expanding. Now, if you actually make more money, that money that's on the income statement and net profit, you can now put in on your balance sheet in assets, current assets. Could be in checking, savings, could be in fixed income, right? You could actually take that money and invest in other projects that could actually make more money. The phenomenon we're actually seeing in precious metals, the new consumer staple sector, you're going to see that it's been amazing. Now, I want to go back to the one that we're not in. So the paper money account actually has NEM, but I want to go to AEM. Now, if you look at AEM, what you're now going to notice, okay, is if you take a look and just be disciplined to the moving averages. Now, remember, when the red lines happen on the moving averages, those are typically not viewed as buy signals. However, there could be someone that says, well, when the moving averages are red, that's when I buy. I've asked the question to people, did you actually buy? Okay. They say, no, I was just saying that to see what someone would say. Okay. We're showing the examples when the moving averages go green. We have a 1, we actually have a 2, And then today we're getting the crossover. Now, I know what's going to happen. Now, could someone have actually bought on day one? Good. This is the most aggressive. Could someone bought on two? Many of you like two. How many of you like getting on number two? How many of you said, no, James, I want confirmation? I want confirmation. How many of you like that confirmation? Now remember, the confirmation ain't free. What are we saying when we say that? The confirmation is not free because the stock has to go up to show you confirmation. And now the stock is higher off Seaport. All right, now, if you made a higher high, what tends to come after that higher high? Now, guaranteed? No, absolutely not. If you make a higher high, there has a tendency to make a higher, help me out here, crying out loud, don't make me do all the work. Higher low, Len says. Now, if we make higher high, higher low, smell that? That smells like an uptrend. Now, if we knew the future and knew it wasn't going to go down, we wouldn't set a stop, okay? We wouldn't position size because we know the future. But since we don't know the future, what we're going to do is we're going to right-click, go buy custom, we're going to go with OCO bracket. Now, this is looking at the technicals. We're speculating, which is not a bad word. It's not a four-letter word either. We're going to go back to analyze for just a second. We're going to look at AEM. Now, to kind of show the fundamental tracks of what's been happening, you're kind of expecting, now this is really looking at 20, 21, 22, 23, 24. You would expect that in, let's say, the last, 2-3 years, that the sales per share should be increasing because the product you were selling was at a higher price. You would sure hope that actually if they were selling at a higher price, there would be a little money left in the cash register in the form of what's known as earnings per share. Now, what's kind of interesting is, think of this like a pie. If you got, let's say, an earnings per share of 378, they're giving back about half of that earnings per share pie in the form of a dividend. Very nice. Now, wait, what's the risk of dividend? Well, they could raise the dividend. They could raise it a little bit. They could actually keep it the same. They could cut it a little bit. They can cut it completely. It's not a contractual obligation. It's up to the company if they want to keep paying the dividend. Now, if they raise the dividend, okay, investors might like that. They might think, hey, this company actually thinks the sales, earnings is going to maybe support that payment over time. Now, what we're going to show in this case is if we look at, let's say, the quarterly, you sure would expect, and this is where we're starting to see the tracks of kind of the sales price. You look at Q3, 4, Q1 of 25, and 2025 Q2. This is where you're seeing the numbers start to explode, which you expect. You look at the jump in actually gold over the last, let's say, couple quarters, earnings per share in 2 quarters, 1 quarter, 2 quarter, the earnings per share doubled, okay? And that's what I'm talking about, the margins increasing. Now, here's the comment. David actually says, don't know if it's correct. I don't use stops, but hedge with the S&P 500. And so that's kind of up for the investor. It's for up to them to decide. Do they want to use stops? Now, I can tell you what I think, but sometimes I got to keep to myself. Now, now if you saw my teaching, you might kind of say, does the James kind of consider stops, or maybe does he use something else, or consider that as a form of risk management? 2 forms of risk management, position sizing. So number one, what we're going to do is we're going to bring up this position. I'm going to go pull up the IRA account, go to charts. We're going to pull it up, AM, right click on the chart. And what we're going to do is right click in the paid money account, buy custom with OCO bracket. Now, stops is not the only way to try to manage risk. One way to try to manage risk is don't buy too much, meaning be comfortable with the position size that you're willing to, it's not maybe more than 5% of the portfolio, more than 8% of the portfolio, more than 10% of the portfolio. You got to realize, someone once said that, there's different types of taxes. And one of the highest, most steepest tax that people could pay is stupid tax. Said, what do you mean by that? Well, stupid tax is when you maybe go outside, a band of what you're comfortable in investing, the capital, and then when it goes down, the losses are way more severe. Okay, now you call it what you want, but a lot of times it's not the market, it's the investor. We like to blame other people for the problems, but sometimes it was the actual investor if we're just taking responsibility. Okay. Now, what I'm going to do is, let's say, hey, if we invested $6,500 on an account at $121,795, it's about 5% of the portfolio. Now, if we buy 5% of the portfolio, invest 5% of the portfolio, could it go down? Sure, but that's the first way we're trying to minimize risk by not investing too much. Now, what we're going to do is we're going to take this off and go just 36 shares, okay? Now, it sure would be nice that if we could actually maybe just go ahead and always buy 100 shares. Not always going to be the case. So now what I'm going to do is I'm going to set the stop. And that stop, what I'm going to do is I'm going to kind of use the breakout area. Now, here's the deal. That breakout area was right about 170. 170 less 2%, 166.6. Okay? 166.6. Dated GTC. Okay, dated GTC. Now the question always is, was this a stock trade? If there's no expiration, there's no strike, and it says stock, this is a stock trade. Now, if we said a target, okay? Now, if we actually looked at this and said, is there a target on this? We might actually have to go back and say, I don't know if there is a target on this. It kind of is like, just going higher. Now, if we don't actually necessarily, now it's going higher right now. If we're not confident on a target based on a price pattern, etc., I'll go ahead and put one, okay? It's not based on like a price pattern, but I'm just going to kind of say, at what point would you be willing to sell given your risk? Okay, I'm going to throw out there 190, okay? But, we're thinking if the price actually goes up, could actually AEM benefit from that? But I'm going to put 190 just so we can show an OCO, which stands for one cancels other, okay? What I'm not going to do is going to go confirm and send. Now, could we raise that target over time? Wonder if actually the price of gold keeps going up and AM is kind of correlated to that. Well, yeah, sure. Now, when I say correlated, now I'll show that in just a sec. We're saying in this case, if the stock goes to this price or less, so the stop is the triggered price to sell. It's not saying where it's actually going to be sold at. You have to see. Send. So when I actually go back to this just real quick, if I say, let's say studies, let's go quick study, compare with custom symbol. Now, what I'm doing is I'm just kind of pulling up and saying, look, do they sell rubber duckies? Do they sell soap? Do they sell dish detergent? Okay. Do they sell t-shirts? What's their sales affected by? Sales is affected by one of them. One influence is really going to be the price of gold. So this chart down here, or this line chart, is really showing really over time the trend of what it's selling. You sure would hope that there would be some correlation to the price of shares and the price of what they're selling. Okay. Now, one time I was talking to some investors outside this company. They said, I said, hey, let's take a look at crude oil. And they said, well, why do you want to look at crude oil? And I said, well, because the companies that you're investing in are oil-based. And they were like dumbfounded, like couldn't believe like that they didn't think of that. You need to think, how is your company's sales? What is it affected by? Okay. And if you're not watching that commodity, and it doesn't matter if you said, hey, I'm going to come in and I'm considering on buying Apple. If you come in and buy Apple and you're not watching, like, are people buying their product? Are there any new products that are coming out? You really want to do a deeper dive than that, okay? Be aware of the new technology, new software, new chips, okay? Because if this stock's going to go up, it's typically going to be based upon valuation of what they think the earnings is going to do that could drive the fundamentals higher. Be aware of it, okay? This is why a lot of investors don't want more than 20, 25 stocks at the most for many people, because they're trying to watch and be afloat with some kind of what's happening. Now, some of those stocks could be overlap of each other, but the biggest actually thing is you're aware of kind of what could be moving the fundamentals. Now, what I'm going to do, so Ray actually says, why not do a derivative type strategy? It's an easy answer. This class is a stock class only, okay? That's an easy answer for that question. Now, what I want to do is I want to fast forward through a couple stocks. Now, one of the questions I get a lot is, how do you find stocks? And I always tell people, you might want to just look at the Dow 30 as a starting point, okay? Now, if we looked at the Dow 30, which is only a list of 30 stocks, less could be more, we're looking to kind of see, are there any stocks that are really showing a bullish bounce, a crossover, a breakout, and so on. Now, if I look at some of these stocks like JP Morgan, that kind of is looking like maybe a diagonal resistance breakout. How do we kind of see that? Well, price is above the moving average. For a long time, the red lines, we saw red lines, red shade, sellers are in control. First time we've actually been seeing little JPM poke its head above resistance. First time in a while. IBM, seeing the price get above the 10-day moving average. That's how it starts. Well, how does it start? Price gets above the 10-day moving average, causing the 10-period moving average to change color from red to green, and then you start to want to see that the 10-period becomes the new support level. But that's not the one I want to talk about. What about Cisco? Now, Cisco has been the one we've kind of been watching. Last week, we saw the price break out, and it fell back inside its old channel, and then pushed again to the upside. Okay, now, if we go back to a weekly chart on this, 3-year weekly, we pull this up. Let me ask you a quick question. Is there anything happening on this on a weekly chart? Anything that you see? Rocco, you see anything happening on here? Vic, you see anything happening on here? Dean, my father's name. Dean's a good guy, okay? And I wish I had your last name, Valenzuela. Okay, my last name's Boyd. It's not James Valenzuela. Now that sounds better than just Boyd by itself. Dean, I like that. Now, here's the deal. If we looked at this, again, just looking at it, not putting my thoughts all over the chart, you know, the moving average we're on the weekly chart. I'll share the chart in just a moment. There's 1. 2 was last week. Yeah, but the breakout failed. Not every breakout's going to work on the first time. And all of a sudden, we're getting a little crossover this week. Now, here we are on Wednesday, okay? And so if we're here on Wednesday, we're thinking, okay, what could happen on Thursday? What could happen on Friday? Now, you could say that every week, okay? But so far, we're actually starting to see Cisco get a little push. Now, this is not a classic hammer, but kind of like the Russell, kind of leaving a lower shadow and or tail near the areas of moving averages. Some technicians might say buyers are buying it at support. By the tail going below the moving averages, somebody, I'm just looking around to see who it was, okay? Somebody was actually buying it below the moving averages. Now, why would you buy below the moving averages? Because you think it could go higher. You don't know, okay? Now, what I'm going to do in this one is, let's do this a little faster, okay? Let's say the investor says, look, I want to come in here and try to buy even a half position. Okay, I'm going to right-click on the chart, buy custom with OCO bracket. Now, what I'm going to do is we'll take that weekly chart look in just a moment. Let's put that in the paper money account, Cisco. I don't want to take a ton of time on this because there's some other charts that I want to look at. So we're going to do this one a little faster. So just let's pay attention. I'm going to go to buy custom with OCO bracket. And then what we're going to do is we're going to try to add to the position. Now, if we go back and take a quick peek at this, okay, that horizontal support's right about $67. $67 less 2%. It's going to give us about 65, 66 if we set a smidge lower than before. Then as far as the target area, now, this is where we're probably going to need the weekly chart. If I go back to the 3-year weekly there, Here in this case, what you're now going to see is this is classic stair stepping, right? Prior high, and now if we kind of go over here to the right, the prior high now becomes the higher low. Stair stepping, okay? Runs to the upside, brand new high, pulls back. Instead of ceiling, it becomes floor, okay? And now what we start to see is a little bounce. Now, if we were going to kind of look at this, this would be like your classic Fibonacci. You got a prior high, okay, prior high, and then you sold off. And there is your classic V pattern. And if you look at that, you're going to see the 161 and the 200 are giving us those targets. Now, if I said, James, I want to kind of try to go for something a little higher, well, maybe it's 79.49, okay? Now, let's go back just real quick on the fundamentals and see what we got here, okay? So when we go back and look at the fundamentals on the annual, you're going to see that they had they dipped in 24, but the other years were actually pretty solid. You're actually just going to see when you look at, let's say, the dividends per share. And there's a lot of people that like dividends, okay? Think of that as the sprinkles on that soft, moist, rich cupcake with icing. And this is just kind of adding to that potential trend. Now, they're not guaranteed indefinitely, right? We know that those dividends can change. But that actually has been going up over time, okay? Could it continue? Took a little dip there in 24. Go back to the quarterly. What you're now going to see is the numbers there, not a big difference. That quarter, which we probably want to see, is can it be higher than where it was Q3 last year? Now, you got to understand that some businesses could be seasonal. They could be also based upon contracts or getting contracts, etc. And so this one is probably going to be a big quarter. Can Cisco deliver new technology, services? Are there any new contracts that are padding on top or being renewed to the ones that they already have? Okay. Now, what I'm going to do is I'm going to put that target right here about $79. Okay. Now, in this case, we don't know if it's going to go there. We're just going to put a target there, and we got to stop at 65 and change. Now, if we take a look at this, I'm going to go confirm send. Remember how that stop works, and we're going to send the order. Now, what I want to do just real quick is a question that was asked is this chart. Let me actually pull this back up. So let's kind of show this. So if I reloaded this, how do you get this and how do you put this on? Okay. So if I shared this chart, share the grid, okay, all we need to really do, and it's the same thing over and over again, this grid right here, if I pull it up, how do you pull it up? We're going to go to setup at the top right, okay, setup, and then just go to open shared item. I'm sharing the charts with you, okay, open shared item. We did. Now, I'm going to copy and paste back in what I sent to you. That's in the chat again. Thank you, Connie, for helping with the chat there. Now, what you're now going to notice is once I copy and paste this, what do I do now? Go preview. And then what do you do now? Click on the green button. Click import. Once you do that, now what you're going to see is the charts are here. We call it the package. The package is charts that we're probably going to use if we're actually trading it, let's say, or investing in it. It could be entries. It could be management of stops. It could be exits. It could be evaluating intermediate long-term trend. What you're now going to notice is there's a couple charts here. If I click on the forward button, what you're going to see is the chart is changing behind me, or right below my arrow, I should say. And as I fast forward, it's just going to change those. How do you open it up? Click right there. Now, if you click on the forward arrow, forward arrow, forward arrow, forward arrow, those are those charts that I think that I've seen through time that can be helpful in terms of evaluation of the position. Now, speaking of that, I want to kind of just take a fast fire. So Walmart, kind of a continuation of yesterday. Don't have a whole lot to say from that example from yesterday. That position is right there. It was up a little higher, okay? But it's right there. If we look at, let's say, the other one, if we go back, and I'm just speaking, let's say, to a couple of these stocks, Caterpillar, you know, if you're the mining company or you're trying to build stuff, you're probably going to need Caterpillars, John Deere's, things like that. Caterpillar hit another brand new high. The ones you're starting to kind of see a little reversal on, which have really tanked, Home Depot and Lowe's. If you are someone that says, James, I like to kind of buy after a pullback, maybe when the price multiples are compressed, when there's still a business behind the price falling, and could there be like a bounce? It might be, we might be looking at, let's say, Home Depot and Lowe's. We're going to keep an eye on those. But you got to remember, those went pretty much like a water slide to the downside, no head fakes at all in the drop. Let's look and actually see, could it actually get a bounce here? If we turn now to, let's say, the NASDAQ stocks, okay? Let me show you a couple, and then we're going to come back. If we looked at AMD, does this look bullish to you? Yes or no? I'll just take a simple yes or no. Does it look bullish to you? Okay? Now, when you look at, let's say, something like CEG, which we said, hey, which is utilities, that has actually been something that's actually been going up. This is probably the most, when we think of utilities, we think of Southern, NextEra Energy, and so on. This is the one that's probably the most forgotten about, but might be maybe viewed the most. Obviously, the volume hitting me right between the eyes, hitting me in the forehead, right in the nose, okay? There's been multiple days of higher buying volume knocking the price to the upside. Now, some of you might say, well, James, that was me. If you did that, yeah, that well done, okay? In the paper money count, that was well done if you knocked that right above the average line. Now, the other one we're going to kind of keep an eye on is Broadcom. Broadcom has kind of been topping back and trying to get a little push higher. Biggest area to actually hold, could we actually do that? 348. AMAT, same thing as AMD. Okay, so AMAT and AMD, those are the ones that are like really close to getting a breakout. Notice step number uno on AMAT. Now, TTWO, if we pull that back up, that's even ahead of AMD and AMAT. That actually to a brand new high. And if we actually go back and look at, let's say, TTWO, now, if you said, James, I struggle to see fleas. Well, you don't have to, okay? If we go to style, a different candle chart that I think smooths the chart out, Haken Ashi. Now, if we take a look at this and we go to Haken Ashi, this came back from 2006. Name was John Johnson, to give proper credit, okay? He started using this. He talked to me about him, right? And this is a very interesting chart. The formulation of Haken Ashi is different than regular candles, but it's an interesting chart to really see trend. And it also leaves marks on the chart of where the higher lows are. Really, the green candles in a row, there's your pull. The red candle, fleeg. Green candles, pull. Red candles, fleeg. Green candles, pull. Red candle, fleeg. Green candles, pull. Red candle, fleeg. Now, what you're now going to notice on this is when you get these red candles that go from red candle to green candle, you're looking to see, is it higher than where it was before? Higher than where it was before. This is slightly lower. This is almost telling us, hey, we did have a consolidation. It was slightly lower, which means the investor is probably saying, look, I want to see a breakout. I'm giving John Johnson the credit because he was the one that brought him up, okay? And I don't know everything, but this is probably back in 2006. He talked to me about him, and you know, it's an interesting way to look at it. Some people will trade off this, but you have to understand they are different than regular candles, okay? What do I take away from Haken Ashi candles? Man, they really smooth the trend out, okay? It's very interesting. This is probably going to make us all sick, but if I pulled up, let's say, NEM, you're going to see that this smooths out some of those red candles. And then if you go back to a weekly chart, this is probably going to, let me get the trash can because it's probably going to make me sick. But if I look at this, oh my gosh, I can't look. Okay. It just smooths it out. Now, why is that interesting? Because a lot of times when we see a red candle or two red candles on a normal chart, our mind starts taking over and we're like, this is starting to sell off. I want to lock in the profits. You can't go broke taking profits, things like that. Okay. But the fact of the matter is that trend is not over. It's very difficult to have big profits if every time you see a red candle, you go and touch stuff and you sell. Okay. So, yeah. No, John Johnson. Okay. John Johnson. Okay. Now, I want to actually go back to one. Let's go back to just real quick. Now, the ones I'm going to also say we're going to keep an eye on is Google. Okay. Google kind of setting up that little diagonal. We talked about Costco yesterday. You can pull that up. But I'm going to go back to this last trade. Now, if we kind of said, are there two stocks that might be trying to maybe get a little push here? It's AMD, and we're probably going to say AMAT. Okay. Now, the paper money account, we're not against. Now, I'm going to ask you, would you want to paper trade AMAT or would you want to paper trade AMD? Speak now or forever hold your peace. All right, now, if we take a look at this, okay? So if I pull this up, what you're now going to notice is I'm going to go back to the regular chart so I can see your answer. Okay, I got AMD from Michael. And now if we take a look at this, okay, I got AMD from Noro. I'm getting more AMD. Okay, so here's AMD. And what you're now going to notice is on a regular chart, it's the same idea. Circle the red and green candles side by side. Circle the red and green candles side by side. Do not overthink it, okay? Now, why is that of interest? The red and green candle, that is the point where we went from selling off, hence red candle, to green candle is where we started buying back up. Think of V. Red candle where we stopped selling off, and green where we started buying again. Think V. These are really markers for where the higher lows could be. You get higher lows, you can now draw support. Okay, why do we care? Well, if I don't know where support is, I don't know where to set the stop. So now what I'm going to do here is I'm going to right click on the chart. We're going to go buy custom with OCO bracket. Now you might be saying, James, there's a big pull, okay, that we could look at. I can't see anything, okay? There's a big pull that we're seeing on the chart. Now, if we kind of mark this so we could all follow along, probably got about 218. The open of the green candle is 224. The midsection is probably right where the moving averages are. And if we kind of zoomed in, if we kind of took those markers, not everyone's going to set a stop at the exact same price level. We're going to show setting a stop below 222.84. Now, what you got to understand here, if you position size appropriately, you got to understand that the lower the stop is, the less number of shares that you could really buy, okay? If you're doing it kind of the way we teach. So the higher risk per share is going to reduce the amount of shares. Now, just for quickness, let's say the paper money account says to buy 25 shares. 25 shares on something where the risk is $17 per share? Well, 25 times $17 per share, the risk per share approximately $425. So what does that tell us? Can we take $425 worth of risk? The answer is yes. We could take up to 500. And so I was pretty close with 25. Now the target, you decide where that might be as I got to wrap it up here. But if we go back and really take a look at this pull, now by the way, does the pull have to go up consecutively or could there be gaps in here? And the answer is it doesn't have to. It could be gaps in that chart, okay? Now I'm going to kind of choose a little bit more. If we said, hey, that movement was from, let's say, 170 to 230, that's $60. I'm going to even take half that. Okay. $60 is kind of a lofty target, but let's say it's only 30 bucks. Okay. 30 bucks is still about 10%. Okay. Now what I'm going to do for time's sake is I'm going to put that target right at 255 to probably 260. I'll put it in the middle at 257 and a half. So our last trade here today was AMD, looking to see if it actually could break higher. Okay. So we did 3 trades actually here today at least. We got AMD. We also did the first trade. We did NEM, and we did one other one as well. I want to thank you so much for your comments and your participation. And also remember, with what we discussed, it was done for example and illustrative purposes only. Thanks to Connie for answering those questions in chat. And also remember that actually coming up next, if we actually pull up Learn, let's go to Schwab Coaching. Let's see the format of the day. I'm going to pull up right on live webcast, virtual workshops, pull this up. What you're now going to see is the next class, Managing an Option Portfolio, coming up next. Trading Price Patterns with Rachel. Getting Started with Thinkorswim. Trading Index Options. There's Connie. Thank you, Connie, for your help here today. So that's going to be our schedule here today. Now also remember with what we discussed, again, it was for example. And also remember that all investing involves risk. Stay tuned for Brent coming up next. And this has been the class on trading growth and value stocks. Thanks so much. Take care. Bye-bye.